Hi, welcome to the Crypto Republic. Before we begin today, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. Hello, XRP Army, and welcome back to the Crypto Republic, your go-to channel for the latest energy updates and digital assets. Before we get started with today's business, make sure to smash that like button, ring that bell, and subscribe to the Crypto Republic, bringing you updates every day at 9 a.m., noon, and 7 p.m. Eastern Standard Time. And here at the Crypto Republic, we give you the bird's eye view, a satellite perspective to spot the big picture shifts while everyone else is stuck in the daily chaos. Just a reminder, this video is for educational purposes only. This is not financial advice. Always do your own research before making any investment decisions. Well, ladies and gentlemen, something unusual is unfolding across the global financial system right now. And it's not just one development. It's multiple pressure points appearing at the same time. The DTCC signals are surfacing in the background. Regulatory frameworks like the Clarity Act are moving closer to definition. And institutional narratives such as Evernorth are quietly aligning in ways most investors are not fully connecting yet. Individually, these may not seem significant, but together they start to form a pattern, a domino effect across liquidity, regulation, and infrastructure. And XRP sits directly within that intersection. So the real question is not what is happening, it's what it means when all of these forces begin to converge at once. Thank you to everyone that takes the time to like, subscribe, share, and comment on these videos. These simple things really do help the channel very much. And if you're new here to the Wolfpack, our videos are broken in two pieces. At the end, the second part of the video is a rant where we go over everything. With that being said, let's break this down. If you're new here, this is where we break down crypto and macro finance without noise and focus on what actually matters beneath the surface. Because right now, the global financial system is not breaking. It's transitioning under pressure. Liquidity moves, not disappears. Whenever uncertainty hits the financial system, one thing always happens. Capital doesn't disappear. It moves from uncertainty into structure, from speculation into infrastructure. And we've seen this pattern across every major financial shift in modern history. But what's different now is that we are no longer operating in a single system. Let this sink in. We are operating in a dual system. Traditional finance and emerging digital settlement rails. And those two systems are slowly beginning to overlap. The DTCC, the hidden infrastructure layer. Now let's talk about the DTCC. Most people don't realize how important this is. The DTCC sits at the center of global financial settlement. It processes trillions in transactions behind the scenes, every day silently. So when you start hearing DTCC, related signals in the broader market conversation, it's not a retail narrative. It's an infrastructure narrative. And infrastructure is where long-term value is actually built. Because settlement systems don't change often. But when they do, they change everything. Let's talk about the Clarity Act, structural regulatory alignment. Now, layer in the Clarity Act, this is where regulation stops being speculation and starts becoming definition. Because institutions don't move without clarity. They don't build exposure without classification. They don't scale into uncertainty. They wait for frameworks. And the Clarity Act represents a step towards defining exactly how digital assets fit into the financial system. That definition changes participation, and participation changes liquidity. Evernorth, the alignment signal. Now let's bring in Evernorth, because this is not about one entity. It's about what it represents. Early alignment, early positioning, early infrastructure awareness. Let this sink in. Historically, this phase always appears before large-scale adoption cycles begin, not after, before. And that's what makes it important, because by the time something is obvious in markets, the early opportunity phase is usually already behind us. XRP, the liquidity bridge in the middle. Now we bring it all together. XRP sits at the center of this conversation, not as speculation, but as infrastructure. A liquidity bridge designed for cross-border value movement and settlement efficiency. And that distinction matters more now than ever, because the system is shifting from speculative growth to infrastructure utility. You got to let this sink in, it's huge. And those are two completely different valuation models. The domino effect, while everything feels connected. So why does everything feel connected right now? DTCC, Clarity Act, Evernorth, XRP narratives, on their own, they seem separate, but together they form a pattern, a convergence phase. And convergence always feels like acceleration before structure stabilizes. What most people are missing. Most people are focused on price, but institutions are focused on systems. Price is reaction. Systems are direction. And right now, systems are moving first. That's why the narrative feels ahead of price. And that's why volatility often appears before repricing phases. Tokenization, the longer arc. Zoom out further. The end state is not XRP, not DTCC, not regulation. It's tokenization, ladies and gentlemen. Assets moving on chain. That's massive. Let that sink in. Liquidity becomes programmable. Settlement becomes instantaneous. And once that shift completes, the demand for efficient bridging infrastructure increases significantly. Why XRP is in this conversation, you might be asking. In a tokenized system, you don't just need assets. You need connectivity between currencies, between systems, between jurisdictions. And that is where liquidity bridges become relevant. Not as speculation, but as infrastructure. So short-term versus long-term. Short-term, volatility, news reactions, uncertainty. That's expected. Long-term, structural integration, institutional adoption, system-level migration. And those two timelines often move in opposite directions. I want to talk about some historical parallels. Ladies and gentlemen, we've seen this before. When markets moved from manual trading to electronic systems, it felt uncertain. When communication systems moved from analog to digital, it felt fragmented. But in hindsight, those transitions were not chaos. They were upgrades. So, ladies and gentlemen, when you hear XRP domino effect collapsing, think less about collapse and more about alignment, systems syncing, infrastructure evolving, and narratives converging into a single direction, not instantly, but progressively. If this breakdown helped you see the bigger picture, hit the like button so more people can understand what's actually happening beneath the surface. Subscribe for daily XRP and macro breakdowns, and comment below. Do you think we're still early in this transition, already inside of it? Well, ladies and gentlemen, sorry I couldn't be with you yesterday. A lot happening right now, and I'm going to break all this down. I want to welcome all the new members of the Patreon and all the new members of membership channels. Always remember, ladies and gentlemen, one good tip from the pits can easily pay for your entire year subscription. If you want the deeper macro research to learn how to take advantage of all this, come and join the over 400 active traders and investors in the Patreon at the Crypto Republic Desk Monthly. And welcome again to all the new members joining us. Nothing what's happening in the market right now should be surprising you whatsoever. Nothing at all. Nothing at all with tweets moving the markets. The correlations that we went over in the last video, how if you see where oil is right now, that oil and gold can't both rise at the same time. It's just not going to happen. Oil at around, recording the time, 95.29. And if you look at the XRP at $1.36, and if you look at where gold is at 4,411, these prices can't move together. Stay with me here because I'm going to loop in everything that I've been saying after this part of the macro update about commodities and futures. And I talk about all crypto updates that we're watching and why, because that paints a narrative of what we're saying and everything's moving together. The whole world is changing right now, again. So with the news that POTUS is talking about taking over that island that we've been talking about for quite some time, whether that's a rumor mill or not, I don't know. There's 82nd Airborne people prepared to mobilize overseas. The Marines will be there very, very soon. Who really knows what's really going on and what's going to happen, right? But at the end of the day, when we believe Operation Printed to Win, it's going to begin sooner than later, these rock bottom prices that we're going to see. And if there's some form of kinetic action, and we're in the camp that we believe kinetic action is coming, it will suppress prices because there will be a whipsaw knee-jerk reaction. That is why I tell you all the time, as financial mercenaries, we have that Gucci clarity, that Gucci conviction. As the remora, we feast on the sushi. Again, we feast on the sushi. We're along for the ride. We're not going to FOMO anything because you can see the market's going in between ranges. It's very, very much what's happening. And I just want you to listen very carefully because what I'm about to say goes completely against what most people think is happening right now. Gold just got hit hard. We saw a violent deleveraging move, pushing gold down towards 4,100 per ounce in the middle of one of the most dangerous geopolitical environments in years. And everyone's asking the same question. If there's war, inflation, and chaos, why is gold going down? But here's the reality. This isn't weakness. This is positioning. And if you understand what's actually happening beneath the surface, this might be one of the most asymmetric opportunities you'll see this decade. I want to start with the truth most people are missing. Again, not financial advice, just my opinion, and anyone that contains this in any capacity. Gold is not selling off because the fundamentals are weak. Gold is selling off because of forced liquidation and macro positioning. Right now, gold is facing 4 simultaneous headwinds: a surging dollar, a positive correlation to equities, global hawkish repricing of interest rates, and foreign selling of U.S. treasuries. Now, ladies and gentlemen, normally these don't all hit at once, but right now they are. And that's why the move feels so violent. We're talking about a 7x beta to the USD. That's so crazy. Oh my God. That's not normal. That's not even elevated. That's extreme extortion. I mean, that's forget about what that is. That's insane. The US dollar is dominating everything. We told you that we like selling the DXY over 100. But everyone who's been taking that trade loves it. Everybody in the tips and pits that took the oil trade is loving it. But right now, gold is trading like a leveraged short on the dollar. A 60-day beta of 7 to the USD means every move in the dollar is being amplified massively in gold. So when the dollar spikes, gold just doesn't drift lower. It gets crushed, chopped up like sushi. And why is the dollar rising? Because in times of crisis, capital is still flowing in. U.S. treasuries, short-term dollar assets, liquidity safety. But here's the twist. That flow is temporary because the same system attracting capital right now is structurally breaking underneath. This is the $10 trillion problem, ladies and gentlemen. And this is massive. I mean, we can't get off the phones explaining this because there's so much happening. Let me give you a number that should change how you see everything. Stay with me. Write this down. $10 trillion. That's how much U.S. debt needs to be refinanced in the next 12 months. Let that sink in. $10 trillion got to be refinanced in the next 12 months. Now, do the math with me. At 4.5% interest rates, that adds $450 billion per year in new interest expenses. So on top of an already $2 trillion structural deficit, this is not sustainable, ladies and gentlemen. This is not cyclical. This is fiscal dominance, meaning the system will eventually be forced to print, expand, and debase. Operation Printed to Win, it's coming. It's coming, ladies and gentlemen. It's coming. And when that happens, gold doesn't just go up, it reprices entirely. So why gold is acting like a risk asset? Now, here's where it gets even more interesting. Stay with me. Gold is currently positively correlated with equities. That's right. Instead of acting like a hedge, it's trading like a pro-cyclical asset. So when equities wobble, gold is getting dragged down with them. And at the same time, you've got QQQ underperforming. Defensive sectors lagging. Bitcoin slowly climbing. This is a distorted risk-on regime. It doesn't make sense how these assets move together. And in this kind of environment, everything gets sold to meet liquidity needs. You get margin calls, you're selling. You have no choice. You must sell. You must liquidate to make your demands, including gold. So forced liquidation is driving the move, in our opinion. Let's talk about what's really hitting gold right now. ETF outflows. We've seen 2.7 million ounces sold in March at a 17% drop in holdings since early March. But here's the key insight. Gold sensitivity to ETF flows is currently running at 6 times its historical average. So what should have been a small correction has turned into a violent deleveraging event. This is not organic selling. This is forced selling. And forced selling always creates opportunity. I want to talk about the silent buyer, which is China. Ladies and gentlemen, while Western investors are dumping gold, there's one player quietly doing the opposite, China. And this is critical because China is now the marginal buyer that sets the floor price. We're seeing persistent onshore premiums, strong physical demand, stable ETF flows domestically. That tells you one thing. Real demand is not collapsing. It's shifting from west to east. When that happens, price eventually follows the physical flow. Central banks are not selling. There's a narrative out there that central banks might sell gold to defend currencies. That's completely wrong. In reality, they will sell treasuries first, use FX swaps, tax liquidity lines. Gold is the last line of defense. It's the confidence anchor. And once you sell it, you lose credibility. So what are central banks actually doing? They're still buying quietly. So the oil shock, that changes everything. Now, let's bring in the geopolitical layer because this is the catalyst tying everything together. If we see a disruption in the Strait of Hormuz, oil doesn't go up to 100. It goes to 150, 170, even 200. Let that sink in. These prices are massive. They're huge. And the downstream effects from this are going to be so much worse. It's the prices in helium, semiconductors. It's so crazy what's happening right now. It really, really is. I mean, it's raining alpha and opportunity. I mean, this is probably the biggest trading scenarios we'll see in our lifetimes behind the accumulation of cryptocurrencies as far as we're concerned, in our opinion, not financial advice. But that creates immediate inflation shock, demand destruction, global slowdown. Short term, that's bearish for gold because of USD strength, rate expectations, but medium term, it's explosive because it forces more deficits, more debt, more monetary intervention. Gold is now oversold. The recent lows, gold's valuation premium dropped to just 2 to 3% above fair value. That's extremely tight. We haven't seen true discount levels since 2024, which means we're very close to exhaustion of selling pressure. There's no one left to sell. At once, one of the headwinds flips. The move higher won't be gradual. It'll be violent, in our opinion. So the timeline, here's how we see this playing out in the next few days. Our opinions, continued volatility, possible move towards 4,050. Next week, range between 39.50, 41.50, driven by ETF flows and USD strength. I can't believe I'm giving this away for free. Next month, stabilization, move back towards 4,400. But here's where it gets serious, and this is the big picture. Over the next 12 months, gold 5,200 to 5,600. And over the next 3 to 5 years, 7,000 to 8,000. Not financial advice, just our opinion. Anyone intends any capacity. Why? Because the system cannot sustain rising debt. We just went over that. High rates, structural deficits, something has to break. And when it does, gold becomes the ultimate beneficiary. So let me leave you with this, okay? Right now, the market's telling you gold is weak, the dollar is strong, everything is under control, blah, 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 blah. But the data is telling you the complete opposite. We're sitting on a $10 trillion refinancing wall, global inflation shock brewing, geopolitical escalation risk, and the structural shift in who owns gold. This is not the time to panic, ladies and gentlemen. This is the time to position, because when this deleveraging event ends, there won't be a second chance, in our opinion, at levels like this again. So, ladies and gentlemen, understanding macro shifts that we're going over, you're ahead of 99% of the market. If you're here, you're ahead of that in the Patreon as well. But over the next few years, that's going to matter a lot, really. Ladies and gentlemen, going over all of this is so massive. It took a lifetime for me to understand what I'm explaining to you, that I can speak about it so fast and look at this like I'm taking someone's vital signs. The world is changing. Everything is changing in front of your face. Everything. There is so much opportunity in the markets right now because of this chaos, this chorus of chaos, what's happening, and having the discipline to understand how to take advantage of all the markets that we went over is a skill. And you know what? I keep telling you this. One good tip from the pits can easily pay for your entire year subscription. If you want the deeper macro research and to learn how to take advantage of all this, come and join the over 400 active traders investors in the Patreon at the Crypto Republic Desk monthly. Doesn't matter if you're a brand new trader. Doesn't matter if you're just beginning this adventure for yourself. Come and join us. We'll show you how to become a financial mercenary. You know, I always tell you, you make a living by what you make, by life by what you give to other people. And it's remarkable. But what this has caused, and again, follow me, and I can't believe I'm giving this away for free. If you're writing this down, you have actionable intel. Again, but from gas to silver, ladies and gentlemen, the world's new force majeure era has begun. The force majeure era of reigning alpha has begun. Let this sink in. It's never going to be any easier than this as far as we're concerned if you know how to read the tea leaves with this. Qatar's halted LNG flows reveal the fragile of the global trade and hint at a coming reckoning in metals where paper promise may soon meet hard reality. In the bitter winter of 1870, as Prussian forces encircled Paris and commerce ground to a halt, French merchants invoked an unfamiliar phrase, force majeure. Force majeure. Contracts for coal, wheat, and rail shipment were nullified by cannon fire, not choice. The term, born from civil law, captured a nation surrendered to chaos beyond intent. Today, the same legal ghosts resurface, this time not amid siege walls, but amid ruptured pipelines and vanishing silver vaults. Qatar declares force majeure on LNG contracts amid everything, war damage. So when you look at this, it's crazy. You got to realize this, and this is the most important thing about why I'm saying this. Most people have heard this phrase, they don't know what it means, okay? So, in a major disruption to global energy markets, Qatar has declared force majeure on long-term LNG contracts to Italy, Belgium, South Korea, and China, potentially for as long as 5 years. The announcement follows devastating damage to the country's crucial Ras Laffan facilities after Iran's attack earlier this week. Qatar's energy minister and Qatar Energy CEO confirmed that the impact is far worse than initial reports suggested. So according to the minister, 2 of 14 LNG trains sustained significant damage. 1 of 2 GTL, that's gas to liquefied plants, is inoperative. 12.8 million tons per year of LNG production is offline for 3 to 5 years. Ladies and gentlemen, that's so huge. It's massive. That represents 17% of Qatar's total LNG export capacity, equivalent to $20 billion in annual lost revenue. Estimated facility damage, $26 billion. The minister, clearly frustrated, said sites should not have been attacked. So if you look at this, with Trans S4 and S6 co-owned 30% by ExxonMobil, now offline, production cannot resume until regional hostilities end. So the fallout extends beyond LNG. You're looking about Qatar's considered exports are down 24%, LPG 13%, naphtha down 6%, sulfur by 6%, and helium by 14%. So for buyers in Europe and Asia, the move means suspended contracts and a frantic race to produce replacement cargoes on the spot market. Italy, Belgium, South Korea, and China, once tied to stable Qatar supply, must now compete head-to-head for scarce global LNG, bidding against one another and every other desperate importer. Analysts note, and we went over this, we said this in one of the videos where we gave out LNG tips from the pits. I gave this out. This was a freebie. We gave this out again. The United States currently holds significant export capacity to partially offset the sudden shortfall, the golden passenger. We gave that out when this first started happening. Global LNG prices are already spiking in early trading. The shock in Qatar's natural gas sector offers a chilling analog for what could unfold in precious metals markets. So now we're going to move to silver. Just as sudden loss of LNG capacity exposed fragile dependency in global energy, flows disrupted in the physical silver availability would expose the same structural weakness in the financial system. So both markets rely on the illusion of infinite deliverability, contracts, assuming supply will always exist. When war scarcity proves otherwise, the paper promise collapses. So if you take this away, the Qatar crisis demonstrates how force majeure transforms from a contractual clause into a systematic contagion, erasing trust, seizing liquidity, and redrawing the map of global trade. So if you want to think about, again, not financial advice, we're going to take full advantage of everything we just said in every market downstream. Oh my God, it's like I said, what's happening in the world is very upsetting, but if you can, you should take advantage of what's happening. Come and join the Patreon. The Crypto Republic Desk Monthly will show you how we're doing it. Again, what force majeure could look like in the Western silver markets, COMEX declares force majeure after physical silver inventories vanish from registered vaults. Sayonara. Traders who stand for delivery face cash settlement only, igniting panic in lawsuits. Bullion banks scramble to source metal, but premiums explode, exposing paper-physical disconnect. Industrial users hoard remaining supply, squeezing refiners. ETF redemptions spike. Trust in paper silver evaporates. Retail stackers become price makers. As spot dislocates from futures, central banks intervene to stabilize. Markets freezing bullion trades. Confidence shock cascades into gold, copper, even treasuries. Outcome, systematic trust breaks, birthing a new physical-only silver market standard. Ladies and gentlemen, that's why I said in our lifetime, these events happening right now is unbelievable. That's why what's coming for XRP, ICP, HBAR, the world is changing. These changes don't happen overnight. They're happening every day. Every day. Everybody here loves my lines, like about the wolf. Doesn't do tricks in the surface, my favorite animal. Rome wasn't built in a day, but they were laying bricks every night. That's what's being laid every day with this. It's unbelievable, ladies and gentlemen. There's problems downstream with everything. Helium's going to affect semiconductors. We're going to be giving out tips on that. That's going to be massive, massive. People don't even understand. Like I said, I don't watch TV. I pay attention to the financial chaos, being a financial mercenary. I love the opportunities that this chaos has created. I don't like what's happened, right? But if we have to be exposed to what's happening, we might as well take a chance and prosper from what's happening, because around the world, there are people prospering from what's happening. You can see people front-running the oil trades, people front-running poly markets. So why should you not have the opportunity to front-run and take advantage of what's happening from tips in the pits, right? I don't know. Ladies and gentlemen, I keep telling you this over and over and over again. One good tips from the pits can pay for your yearly subscription. Doesn't matter if you're just getting going. But as a financial mercenary, there's so many opportunities right now. What's going on? It's crazy. But now If you're still here, I salute you. And I love everybody's comments. I love the energy. I love the comment that someone just found this on a guest and sharing our videos. I salute you. That's the greatest thing about our wolf pack and our republic. It's a secret. If you make it to the end of the videos, you get the Italian ice, the candy on the bottom. Most people see the first part of the video. Oh, I can see this. I'm keep scrolling. But you get to the end. Oh, my Lord, look at you have. Holy Moses, holy Moses. You have actual intel. You see. They don't want you to see, because financial mercenaries, we take advantage of everything. So I'm going to loop this in. Stablecoin reward programs, the point of contention, the Clarity Act. The U.S. Clarity Act is proposed U.S. legislation aimed at establishing a broader market structure framework for digital assets, including how they're classified and regulated. According to reports, a sticking point for legislation has been how the bill treats interest and other rewards paid on stablecoins. Incumbent financial institutions have reportedly been against allowing users to earn interest or rewards on stablecoins similar to traditional interest paid on deposits, while many crypto businesses have been supportive. According to Politico on Friday, key senators have achieved a tentative agreement with the White House that could clear the way for the landmark crypto regulatory bill to advance in the coming weeks. Yesterday, CoinDesk, citing a source familiar with the industry, opened chance to see the text that the latest version of the Clarity Act would grant reward programs on a narrow basis as long as they don't resemble the interest from bank deposits anyway. CoinDesk wrote that the legislation would ban yield payments for simply holding a stablecoin and would restrict any approach that makes the program in any equivalent way to a bank deposit. So according to them, the compromise includes allowing reward programs on users, stablecoin activities, but not balances. Again, and big news, Coinbase and Circle closed 9%, 20% down. Yesterday's news regarding the exact nature of the Clarity Act compromise led to a sell-off in Coin and Circle. Coinbase CEO Brian Armstrong had been previously critical of language limiting stablecoin rewards. January, Armstrong wrote on X that the version of the legislation at the time had too many issues for the firm to support it. Armstrong pointed to draft amendments that would kill rewards and stablecoins, allowing banks to ban the competition. So speaking at the World Economic Forum in Davos in January, which you know I never watch, he pointed out that China did just come out recently and say that their central bank digital currency is going to pay interest. That's massive, and noted that offshore stablecoins that are actually larger than the U.S. regulated ones right now. So he believes offshore stablecoins will benefit from restriction on stablecoin rewards. We're in the camp that we agree with him. Okay, Circle's CEO has also been supportive of these initiatives. In January, speaking at the World Economic Forum in Davos as well, he said concerns regarding banking stability as they related to stablecoin rewards are totally absurd, said that these programs help with stickiness, they help with customer transaction. How do these developments affect USDT, Tether? USDT is not aimed at the U.S. market and falls largely outside the intended scope of the Genius Act. In this context, the restrictions discussed in this note have limited impact on USDT. Okay, Tether's USD focused on U.S. regulated SAT stablecoin, on the other hand, would be impacted by the Clarity Act. USAT is developed specifically to operate within the United States' new federal stablecoin framework established under the Genius Act. So Tether announced it has entered a formal engagement with a Big Four accounting firm to complete its first fully independent financial statement audit. They've discussed this, and we were going over this with customers this morning on our AM note to all institutions. We sent something out on the Patreon about this again as well. We pay attention to this because this is really important. When you see what's really laser focused in the people, what's moving everything, you realize that you put it up on your wall, your recce, your plan of what you're paying attention to and why. Again, you know that China's allowing things, and that's why there's a big thing going on right now. Tether describes the inaugural audit as slated to be the biggest ever in the history of financial markets. Tether notes the scale of the audit is rarely seen outside the world's largest sovereign institutions and encompassing a unique complex mix of digital assets, traditional reserves, and tokenized liabilities. This is so huge. So according to Tether, a full audit by a Big Four firm is among the most rigorous and globally recognized forms of financial assessment. So Tether began publishing quarterly assurance reports in March 2021, offering an overview of the reserves backing USDT. The commitment to publishing of quarterly extensions was part of a settlement within the New York State Attorney General in February 2021. Settlement was related to a USD 850 million loan Tether made to Bitfinex. Historically, Tether's reserves have been the subject of sensational media reporting and broader publicization. In 2021, for instance, there was an FT article where the short seller Hindenburg Research had set its sights on Tether, launching a USD 1 million bounty program for information on the stable company at the center of the global cryptocurrency market. That was crazy. This speculation has persisted until relatively recently. In January 2024, just 2 years ago, former Cantor Fitzgerald CEO and current Secretary of Commerce Howard Lutnick told Bloomberg, referring to Tether, they have the money they say they have. Lutnick further remarked that there has always been a lot of talk. Do they have it or not? And I'm here with you guys. I'm telling you, we've seen it and they have it. So that's what they're talking about. So if he's saying it, we tend to believe in him. In February 2023, the Wall Street Journal was the first to reveal that Tether is using Cantor Fitzgerald to help oversee its USD 39 billion bond portfolio, according to people familiar with the matter. That's massive. So Tether managed those assets, haven't been widely known. So if you look at where all this is going and how it's massive, I'm always talking about Tether. So according to Tether's latest insurance report from quarter 4, 2025, they have USDT's USD 192.88 billion reserves were composed of 76.31 cash and cash equivalents and other short-term deposits. U.S. Treasury bills, gold, and BTC account for a further 9.05 and 4.37%. Gold has been seen as an increase in USDT's reserve. Tether quarter 3, 2025 insurance reports indicate gold accounting for 7.13%. Ladies and gentlemen, the takeaway from this, again, prior anxiety and speculation surrounding Tether's reserves took place in notable different environments. Stablecoins and much of the crypto space were viewed and skepticism by U.S. and global regulators. Under the Trump administration, stablecoins earned strategic support as a new source of demand for U.S. debt. While Tether's announcement audit takes place as a moment within the skepticism, anxiety has substantially abated. The audit is likely to further the trust that the crypto market has placed in USDT. Ladies and gentlemen, some of the big things that I want you to pay attention to and why I take the time to go over this with you. The world is changing. See, it's a complex idea that's going on, and I'm trying to take the PhD out of PhD for you guys to see this. That's why I share with you what we think are the most important things to pay attention to. Again, but this is something that's huge. Fannie Mae will allow crypto-backed mortgages for the first time, enabling BTC or USDC to be pledged as a down payment collateral via Coinbase. It's amazing. And Better Homes of Finance. Borrowers retain crypto ownership, avoid triggering taxable events, and face mortgage rates of up to 1.5% points higher. No margin calls apply with that. So the White House Regulatory Office completed its review of a proposed Labor Department rule that could permit cryptocurrencies and private equity and 401k plans. The rule, classified as economically significant, awaits formal release and follows economic order encouraging alternative assets and retirement plans. The USD 10 trillion 401 market is covered. It's massive. It's so crazy. It really, really is. Franklin Templeton has partnered with Anando Finance to launch tokenized ETFs, allowing 24/7 trading via crypto wallets outside the U.S. Ando Markets tokenized assets have reached USD 1.8 billion, and tokenized gold surpassed USD 4 billion, with platforms like Comtech Gold offering digital tokens exchangeable. It's so crazy that these are the biggest things going on right now. It really, really is. Binance is very important. If everyone watched one of our videos last year that had around 150,000 views, Binance has implemented stricter regulations for token issuers and liquidity providers after criticism for market practices during October 2025's digital asset crash. New rules prohibit revenue sharing between projects and market makers and require crypto projects to report key contract details. The exchange indicated plans to blacklist violators. Massive. It's so crazy. And Zach XBT, an on-chain investigator, claims Circle, the stablecoin issuer behind USDC, wrongly froze 16 operational wallets belonging to exchanges, online, casinos, and currency businesses in an ongoing U.S. legal case. Ladies and gentlemen, this is the biggest thing besides Binance will list Tether, Gold, and open trading for multiple spot trading pairs. The world is changing. Everything that we just went over right now is how the world is changing. So what we see happening, there's going to be a lot of chaos going this week. The ranges, the catalyst will be if there's some form of kinetic ground operation on these islands. Something's going to come to a head. Tweets are going to move markets. Everything's going to move markets. There's going to be we will have some moments where, ladies and gentlemen, please return to your seats and fasten your seatbelts. We're about to lose cabin pressure. So if you want to understand and you've made it this far, you should see how we're going to navigate this again. And come and join us at the Crypto Republic desk monthly, because one good tip from the pits can easily pay for your subscription and join the over 400 active traders investors already there. But ladies and gentlemen, with that being said, this content is for information on entertainment purposes only and should not be taken as financial advice. Always do your own research and consult a licensed financial advisor before making any investment decisions always. Remember, the game is changing, and those who understand it first will benefit most. Make sure you're on the right side of it. You have two choices. You can be like the crowd, reacting after the move, rationalizing why they missed it, telling themselves it'll never happen again, or you can be the one who saw behind the curtain, the one who understood the infrastructure shift, the one who positioned early, not randomly but intentionally, because some moments in history are loud, but the ones that change everything are quiet right up until the moment they're not. And this is one of those moments. Do not blink because the world is distracting you with noise while XRP continues developing behind the scenes and building momentum in the broader digital asset landscape. Stay sharp, stay informed, accumulate knowledge. Your move now will be remembered. It's not the end of the story. This is just the beginning. If this opened your eyes, smash the like button, ring the bell, and leave a comment with your thoughts. Turn on notifications, and most importantly, subscribe to the Crypto Republic. We break down the major global banking trends shaping digital assets today, giving you content, clarity, and research you can use. Don't just watch history happen. Stay informed, stay ahead, stay in the Republic. I love you all. See you on the front lines.